Hey, hi John. So it looks like only you and me. So hope you are seeing my screen. So first of all, let's talk about today. You know what I miss, and that's a good time to review uh, my trade strategy. You guys notice that today I open some call spreads and put spreads. I open really on time, but I didn't think fast to close the short puts to get full premium. Okay, so remember that. Let me put the thinkorswim back in the screen. So the call spread run very well. Everything decay went to zero, close worthless. But I didn't think fast to close the put spreads. Not the entire spreads, but to close, for example, the 4,170 short and to close 4,150 short. And keep, at least the 4,165 open and keep running. That was my fault. So consequently, what's happened? I lost two spreads and I profited with one spread. At the end, I wasn't profitable. Okay? But was my mistake. What I miss when we back test 4,175, as soon as open both, we went back up to 4,175. I start to observe the delta decay, but I didn't take any action. So it was totally my fault. So as soon as I saw the rejection today, I suppose to become and close such contract and keep the 4,165 that I didn't use the money. Why I didn't use the money? Because I sold 4,170 and I used the money to buy 4,165, also as a 5 protection loss, right? But I didn't act as a trader. Consequently, I missed this spread and I missed the another spread. But the sale of 4,180 and buy the 4,185, I receive 100% premium. But I live in the casino, I live in the house, those spreads because was totally my fault. Okay, totally my fault. I opened correctly, but I didn't act faster to close those short puts. Okay, so and also in the morning call, I told you guys, I highlight several times that the downside has much more premium than the upside because they imply volatility. For tomorrow, I already finished to update part of my dark pool spreadsheet, but for me it's a very tough call. Why? First of all, we have been seeing DIX jumping and the GX dropping a lot. The GX is still high, still positive, but dropped $1 billion. What this means? Price acceleration. Okay, this means price acceleration. Tomorrow, I expect to see volatility and huge movements. Could you be up and down crazy like a roller coaster? That's totally normal because the amount of gamma exposure that we saw dropping. Okay, but it's a really tough call. Why I'm telling that? We don't have too much gamma that make me believe that you can see a huge squeeze. It's less than 100k. So it's not a big negative gamma exposure. That I put like a foot behind to guarantee that you see a squeeze, just because the amount of gamma exposure that we have. As you also can see, they set up a gamma wall. Not I cannot talk like a gamma wall, but they set up a support through gamma at 4140. This region match with the EMA 20. That's the blue line. Is where the market holds at least today. Let me get back, sorry. So you guys, you see that they set up at least a gamma defense exactly where the EMA 20 it is in the daily graph. That's this blue line. Per graphic pattern, now all the indicators start to show us a sell sign. It's not yet, but in progress, to form a sell sign. But the EMAs is already pointing off. Of course, if you see a squeeze tomorrow, this will be revert, as you have been seeing, since December. Okay, but so far EMAs point south, and indicators TRIX, MACD, and ADX, is in process to give us a sell sign. Let me take the graph out of the screen and let me bring back my spreadsheet. Okay, but as I said, those numbers, the amount of gamma exposure, is not convincing me to see a squeeze. Now, it's really not convincing to see a squeeze. Also, this, gamma protection, defense, let me use like this, defense is not too big at all. Okay? A couple of spiking deltas, that's my daughter, so hold on. Tá legal. There's a couple of spikes on delta, could you bring market down? That's totally normal. And we have gamma wall, negative gamma wall, we can consider like a put wall at 4,150. That's the current how can I say, resistance. Sorry, because of my daughter. So 4,150, that's the current resistance. We have negative deltas, we have negative gamma exposure in that region, and if we break, we have more negative exposure in different regions, 4,155, 4,160, and up to 4,166. Okay, I just highlight over here. And if you look for those regions, who is those regions? 4,166 is the EMA 3 and 4,160 is the EMA 8. So we could see a back test if you not see a squeeze. That's totally normal to see a back test in one of those EMAs and reject and come back down. So if this happens, if this will be the setup, I expect to see, as soon we backtest one of those gamma regions, I expect to see this gamma protection is gone. Okay, and market will be ready to go down. Of course, that you need to monitor the amount of the gamma exposure that you could be spiked during the intraday. If you spike to $1 billion, market is supposed to be ready to come back up. As I explained today in the morning, for those people that was looking for 4,300, we're supposed to be first going down. Why? Implied volatility too low, no premium above 4,200, much more premium for the downside, so we need to clean it up, the preview gamma wall, especially the 4,200. So market today went back down, cleaning up these, all those people that were long, and now bring back, bears to the book. Not too much bear again, because the amount of the negative gamma exposure. Okay? I highlight over here in the book the support and the resistance. As you can see, the market's really tight again. Support in green, 4,140. As you can see, you have more than 1,000 contracts open. That's the open interest. Against 6,084 in the put side. Also, we have higher implied volatility in the call contracts comparing with the put side. And we have 57 deltas against minus 42 deltas. So, to break the region, we need to backtest first 4,150 or maybe 4,170. Or, sorry, 60. As I put over here. That's supposed to be 4,106. That's the EMA 8. And we have in that region, 4,160, minus 70 deltas. Okay? To break the level, we need to see a decay of the deltas at least from 20%, minus 20%, 21% to be back to minus 49, and then this will be a new support, 4,160. Okay? So, to clean 4,140, bulls need to bring market back at least a little bit above 4,150, and consequently, bears need to jump in to bring market down. If you lose 4,140, do it the low GX, we can drop 100 points, guys. And, I put over here the major support, and we could see a back test at 4,050. My eyes open in that region. Fab, you crazy? Why you look for that region? Let me now explain why. You see those contracts already 25 cents. Of course, minus 0.2 delta. We need, a huge spike. We need at least 48%, minus 48% delta spike to see this at 40 minus 50. And consequently to see this in the money. Is a huge spike? Yes, it's a huge spike. But remember, to bring market those levels today is not difficult because the lower GX that we have. It's not too much lower, but drop $1 billion. And why you could be back test over there? If you check, this line, the 1,380, on May 17, somebody unwind almost $1 million premium. Strike 4,055. They unwind at $10. Okay, why they unwind? Because the open interest wasn't too big. Consequently, this player is unwind. Wasn't a short put, but unwind. So we have implied volatility in the region at 22%. It's much higher than we have, above. Also, if you check higher levels, we also have lower implied volatility compared with those contracts, for example. We still printing much more premium to the downside than to the upside. Okay? Is per, the option book, the downside is paying more premium than the upside. Because I'm not really convinced that we will see a squeeze tomorrow. Okay? Usually this setup in the last couple of months is a setup to see a squeeze. But let me highlight one more time. is not too much negative gamma exposure. We have a small defense at 4,140 that could be a trap. You know, market, dealers defend for a while 4,140 to bring market back up to 4,150 or at least at 4,160, and then they could be restart to sell again to see this wall, this protection disappearing, and especially if the gamma exposure didn't jump to $1 billion, we have a free way to lose 4,100. Remember the big wall that we have before the 4,100? We don't have anymore. It's really small negative gamma exposure at 4,100. Consequently, I'm looking for a huge possibility tomorrow to backtest this region, especially if we go back to 4,150, make a fake break, backtest 55 or 60, and then bears jump in and prepare, the market, the structure to break 4,140. So we're supposed to be see a spike in those deltas to going above minus 50%, and then 4,140 will become the resistance. And consequently, the major resistance will be 4,150 in that case. This is supposed to be above 55, around 70, as we can see here at 4,106, 65, so minus 70, 76. So that's, a very huge, resistance nowadays. So possibility open